Hello traders, welcome back to my YouTube channel. My name is Augustine O, King of FS. In today's video, I'm going to be starting a series called See What Others Don't. This is part one of See What Others Don't. It's quite going to be a little course because I'm going to be sharing my strategy, everything about my strategy on this YouTube channel. So you don't have to miss any single video. So if you haven't subscribed to my YouTube channel, do wait to subscribe to my YouTube channel right now. Do it right now because why? This video is going to change the way you see the market, the way you can view the market in the right way. So if you haven't subscribed, do that and subscribe right now. So don't just jump into start taking trade because I said you should do this, I said you should do that. You have to maybe practice, understand. It's quite going to be for you to just go and then backtest this strategy on your own. So because I'm going to be dropping it every single day. If you backtest the strategy, if you don't work, if it doesn't work for you, come back to the video, rewatch it, go back again and then backtest because then you are going to get experience on it and then you are going to be using it to take your trade. So let's dive into the chart so I can teach you how I trade personally so that you can see what others don't. So let's start this video so that you can understand this. But now you have to take a screenshot of this, like take a screenshot of this. If you want to understand my strategy, this is just how my strategy is. This is how you can implement it. This is how you can understand how everything works. So let's just dive into what I'm trying to say here. Now you can see this level as a sweep. You can call it adjustment before or anything before, but now you can see a break of market structure. After a break of market structure or before the break of market structure happen, the market will more likely create a minor adjustment before the break of structure. So you will see a break of structure, a minor adjustment will be created, which is another break of structure to the upside, which is just a little break of structure, but not that high, which should be a minor inducement. So a major inducement. So the market will take major inducement out, and then this minor inducement will be my entry. The minor inducement will be my entry. Always put that on your mind. Minor inducement will be my entry. And the second one is that okay, the market will create another minor inducement at this level, and then create another major inducement at this level, and then the market take out this minor inducement, and the market is not yet in 50% level, which is on a Fibonacci level from this high down to this low. It's not yet on a 50% level. When you create this major inducement, it's not yet on a 50% level. But right now this one is currently on the 50% level, but sometimes it will be on that 50% level. But where I'm most likely take trade from is this 0.768 86 or this 0.65. That's where I most likely take my trade from. But this level I've already given me a confirmation that I will be taking trade from this minor inducements. So that is where I'm taking my trade from. So I will be looking for how the market will get to this minor inducement for the market to buy. So what I'm going to be teaching you guys here is clearly my strategy, everything about my strategy. I'm not going to be showing you guys step by step for you to train your eyes, for you to see what others don't see. Understand, this is episode 1 of seeing what others don't see. So see this now, just to understand this, because you are going to be needing this in all your trading. So after the major inducements, which major inducement have been taken out, the market creates another major inducement. Note, major inducement have been taken out, another major inducement, and then the market came back to this level, which is this minor inducement at this level. And then the market pushed all the way down, giving me a first break of structure. That's where I will call first break of structure. After that first break of structure, the market create another major inducement. I will take my trade from this minor inducement. So most time on gold trade, this is AUD USD. So most time on gold trade, the market will likely like to take out this high, which is this high right here. So for me, I will just put my stop loss at this place, or even look for another minor engagement which is close to this entering, so I can just enter from there, and then the market will just keep selling. So sometimes I will just put my stop loss right there, but now I'm going to be using this. So this is not gold, this is AUD USD, but if it happened on this AUD USD, you are going to understand it. So on this major adjustment which we are going to take trade from, if the market hits this major adjustment, this is going to be a swing trade. So that's why I'm a day trader and a swing trader. So I can just take this in one day, first take profit, second take profit, and then I will be waiting for this one to form maybe like in 2 or 3 days. So this is just how the market will. If you haven't taken the screenshot of this strategy or this drawing, do that right now. Do that right now. Do that right now. So without further ado, let's just jump into the chart. Before we jump into the chart, so I'm going to be cleaning this. So if you haven't, just fast forward it back and then screenshot what I just said on this place. So because this is how you are going to be taking trade in this setup. So on this place, on this place, as you can see, this was like a sweep. This was like a sweep. This level right here, it was like a sweep. So I can just say let's widen this candlestick a little bit so I can see it. So that was like a sweep, maybe a major inducement was taken at the level. So the major inducement was taken out because it was in this high. So the market was using this other block, which is this minor inducement. You can see this minor inducement. So the market didn't get to the minor inducement, or we get to it. So it didn't get to the minor inducement. Maybe I will have missed the trade or see this break of structure in a lower time frame. This is a 4-hour time frame. I will have used this other block as my entry. Where will I take profit from this level? So this will not be a break of structure for me, a valid break of structure. A valid break of structure. So if I'm looking for any trade at this level, so this will not be a protected low for me, a protected low that the market will not break before the market push all the way up, because I already know that the market is in an uptrend. So as you can see in this level, you can see this major inducement being created, but in the lower time frame, you are going to see another setup, like this kind of setup inside this place, just the same way I was trying to explain it. A major inducement, a minor inducement, then you take a trade from the minor inducement, the market will push up. You are going to see a setup inside lower time frame, but in this place we are going to be using 4 hours so that we can do a back testing, because this is going to be a back testing way. So as you can see right now, so if you go to a lower time frame of this place, you are going to see this push up after the market take out this major inducement, which this was a break. A major inducement was created, minor inducement was taken out. All this low you are seeing right here will be a liquidity, because the market will most likely take them out. So that's what the market did. So it creates a lower time frame. If you go to a lower time frame, you're going to see that the market creates this major inducement right here. It took out this candlestick, it took out this candlestick, and this candlestick. That was a major inducement. Then before the market create another major inducement right here, it was out of this break of structure. We can call it change of character. It's out of that change of character. So if I wanted to take this trade, I will be using this place as my entry, which is this minor inducement right here, because it took out this candlestick. You can see that it took out this candlestick. So that would be my entry, but my stop loss will just be above this level or this breakout block. So I will just say, okay, this minor inducement is where I'm taking trade from, but my stop loss will just be at this breakout block. But to put that aside, so for now, I'm going to go to the front side, but I want you to understand this. After this break, the second break, this is not the second break. This was a major inducement, and then this was the second break, and then the last break of structure, which is the second break. This is the first break of structure after the major inducement, the last break. So you are not going to see it clearly every single day, but if you put your eye down, you are going to see it. So this was a major inducement. The market take out this major inducement right here. So this minor inducement was the entry. So you can see how the market respects this minor inducement. And secondly, the major inducement is not inside this zone. So it's something like this. Let's say the market push all the way up and then break structure to the downside. Let's say before you break structure, create this minor inducements and then break structure to the upside. If the major inducement was inside this place, I would be using a breakup or an order block. But if the major inducement is outside of this breakup structure, just like somewhere here, I will be most likely using breakout block or using my minor inducement, any minor inducement I saw there as my entry. So that's just how this works. So this is going to be another video, but for this video, just stay tuned on that setup that you screenshot. So let's just stay tuned on that one. So when the market take out this level, this will not be a second one. Major inducement, first break, and then second break. And that second break is in a 50% level already. If you draw it from this level down to this high, is in my first entry, which is 0.65. So I will just take this entry from here, and then market will just go all the way up. So my stop loss will just be at this 0.7. So if you haven't taken this screenshot, just do that. Do this Fibonacci retracement. See, this is the setup. So if you haven't taken it, just screenshot it and then go to your chart, put everything in place. So this is how this Fibonacci works. So on this, this already giving me a confirmation that okay, the market is pulling all the way up. So the market is still bullish. So if you go to a lower time frame, you are going to be seeing major inducement because this was in the 50% level. Minor inducement be taken out using this order block to push all the way up, and then something here happened. If you understand this place, this was a major inducement. Another major inducement was created. So if you take this trade, maybe like in a lower time frame, you're going to see order block here to take this trade. The market will most likely take you out, and then this will now be a major inducement for you. So understanding this, you will now see that okay, this is a break of structure to the upside. So if I wanted to take this trade, I would call this a trap. But if I see the way the market reacts to it, this candlestick that you are seeing here, if you go to maybe 3 minutes, you are not going to see it because that was something else, maybe like before the market opened and all those stuff, or the broker and all those stuff. So you are going to see something like this: the sweep, the minor inducement, then the major inducement is just being created right now. So we don't know when the another major inducement is going to be created. So we have to play this and then look at it. So this can be a trap. The market can just come back to this higher time frame minor inducement. So we should always look out for all those higher time frame minor inducement because those are the places you are going to be taking trade from. So let's dive into playing so that you can see what this look like. Remember, why did I call this a strong low? It's strong, but also it can be a inducement. The market create major inducements right here. Then the market take that major inducement and come back again to take out the major inducement. That will not be the sweep that I'm talking about on that drawing. That will not be the sweep. So what I'm looking out for now in this place is for the market to do something like this. Either take out this one or take out another one that you want to create another major inducement. Then I will enter the trade from any minor inducement and then create another major inducement again. And then I will enter the trade from any minor inducement. And then until it gets to this level for me to maybe buy, or until it gets to this minor inducement so for me to buy to the upside. So that's what I'm looking at for now. So let's replay this. Let's go back to three. Let's go back to 1 hour. This is 1 hour. This is the only major inducement we are seeing at this moment. And secondly, you are going to see this major inducement because why? It's already in the 50% level. So you are going to see this as a major inducement. So the market can also react from this level. So you have to mark out where the market will react from because this also was a break in 1 hour time frame. So always look at this because this can be a place where the market will most likely liquidate everybody out. So just be looking for all those things. So we are looking for sales. We know that the market is bullish, but we are still looking for sell. But we want to see something before we sell. So let's just play this out. You can see what the market is doing now. It creates another major inducement at this level. And they haven't taken this layout. So you can create another major inducement here again. You can see it now. You are seeing everything clearly now. Create another major inducement here. The market take it out. That would be a confirmed minor inducement. But another minor inducement is here because why? It's in a 50% level. You can see that the market was in a 50%, even like an entry. If you go to maybe like 15 minutes time frame, you are going to see this type of entry, a break of a minor inducement being taken out. This was the place we would take trade from. Let's say something like this. In 15 minutes time frame, this was something like this, a break of structure, a minor inducement being taken out, a major inducement being created, and then you would be taking trade from here. Let's say you are taking your trade from here, stop loss right here, and then take profit at any 3 hour. So the market have already triggered your entry. So what I will be looking out for on this is going to be quite simple. We have a break of structure to the downside now, and then the market is creating another major inducement. The market is quite creating another major inducement, so we'll be looking to buy from this level, either from this level, and then stop loss will be just above this place. Or let's say I'm going to be using my Fibonacci to enter this trade. So I can either enter the trade from here or use this Fibonacci. So I'm just going to be using this because why? It's already, it creates first major inducement, minor inducement, second minor inducement. So I'm going to be using this as my entry, and then my take profit will be right here. My stop loss will just be above that level. So let's play the market out. So the market triggered me in. I think this was a missed trade. So That's just how it is. But if I was using this minor engagement, which was this level, I would have taken this, but this is now a miss entry. So we now wait for the market to take this place out because we are looking for, if you go to 1 hour time frame, remember on 1 hour time frame, this was the major engagement on 1 hour time frame. This was a major engagement. So let's see what the market has for us. So now we now have a break of structure to the downside. Let's go back to 50 minutes. So we now have a break of structure to the downside. So sometimes I would have just, for me, I would have used this place as an entry if it was in a live trading environment. I would have used this place because why? If I was using that place, I would have been taking 3 hour from this trade. So it's fine. We miss this trade. Just let it go and then wait for the next setup. For this next setup, we're going to be looking for major engagement to push the market down. So the market create this major inducement right here. You can see this major inducement right here. So this will be now be where we enter trade from. And secondly, what I said on gold, I don't know about this pair right now. So if we are taking trade from here, I won't be taking trade from there because I will be using my Fibonacci from this high to this low right here. Then I will be taking trade from here. And if I'm taking trade from there, my stop loss, for my experience, for what I've been seeing, and my stop loss will be here. I know the stop loss is wide, but where I'm taking profit from is this level. So I will be taking 3 arrow trade, or either maybe drag my stop loss a little bit down to complete 3 arrow. I might, maybe, I mean, we stop out, but it's fine. And secondly, we are not even only coming here, we are coming to the downside. So I might even use this place to just to maybe protect my capital. So the market is currently playing out fine now. So this is what I was saying. For my experience, for what I've experienced on this trade, most of the time this place always gets liquidated. So that all those people that was buying from there always get liquidated. You can see this. It also happened on AUD USD. I'm not backtest this. This is just 2021 trade. Like I've not backtest. I just subscribed on this replay recently. So I've not backtest this before. So you can see it right now as it's playing out fine. So sometimes you just have to protect your capital. So just look for a place. Okay, the market will get to this place. Okay, I will see this. I will see that. And that's it. So this is first entry now. Trust me, it's going to play out fine. It's going to play out fine. You can see it right now. So for now, we have not seen a break of structure to this level, but that would have been our take profit. If we have known that, okay, the market will get to this level, we'll have just take the entry here, and here will be our take profit, but we don't know what the market is going to do. We don't know what the market is going to do. So the market might actually come back to this, either this level, either that minor inducement or this minor inducement. So I don't know yet because why we have this break of structure inside this pullback. So we have that break construction. So what I will be looking at for this is also is a major inducement at this point. So we have a break construction. This is also a major inducement. So we'll be looking for a buy from any of this place. So let's just play that out. So let's see if we have a setup right there. So let's say I'm going to be using my Fibonacci. So on this, the market just tap into this level and is respecting it. So that will give you a confirmation that okay, this market wants to respect this level. Just try your best, best possible best to carry your stop loss to this level, which is this place that the market have swept. So just try your best. And secondly, you are still targeting 3 hour actually. So just try your best because the market can still get to this place, then pull all the way down. So just try your best to always make your stop loss a little bit wider so that you can just target your 3 arrow. So I always go for 3 arrow, 3 arrow or nothing. So you can see now the market gets to that place. So we'll now wait for the market to play out. I'm going to 15 minutes time frame. So let's play this out. Currently, I'm also seeing something like this, which is very fine. Firstly, uh, this market is quite a little bit tricky now. You can see that the market break this structure to the downside. The market break this structure to the downside, creating this major inducement just at this level. I don't want to confuse you that much. Let me take out this Fibonacci level and take out this major inducement. So the market might as well come back to this minor inducement at this level, then sell. But then the market haven't taken that in this low. So what I will be looking for is for the market to take out this low. And secondly, my take profit or my take profit here, I might even close at that level. But then if this market trigger me in and it was profitable, you can see how the market was just consolidated. Pull back to 2R, pull back again to enter on that trade, then push down again, giving us a break of structure in a lower time frame, and then the market is pulling back up again to almost our entry. But we know that the market want to sell, so my stop loss will just be above this level, and then my take profit here. So let's play out and see. Complete 3 hour. Complete 3 hour made. So I might close one of these trades so that I will not be get liquidated at the top. Because why? Remember, this was a protected low, so we'll be looking for this place to buy. So we don't know where the market will get to yet. But I might close one trade here. I already have a take profit here, and then let the other one run. And there we go. The market hit take profits. So understanding this is quite very simple. First thing, we take first trade here, we miss one trade here, second trade here, and then third and fourth trade. But how do we understand this? Firstly, we understand that this will be a liquidity. The market will most likely take it out. So the market will most likely take this place out. And then before the market start pushing down to this level, just like this level, because that will be our entry to buy, or maybe do something like buying. So before the market take out this level to maybe like buy, but it didn't break out this above, it didn't break above this level. I already know that the market, this place will be a liquidity, like it will always trap traders. So you have to always put your eyes on the game. Don't rush the market. Just put your eye on the game. If you go to maybe 15 minutes, you take first trade, you miss second trade, and then you take third trade, and then you see that okay, the market is still giving us what we want, and the break of structure is here. Major inducement was created here. The minor inducement was created here. We took this trade from here. The market consolidated to this level, so we put our stop loss here, and everything is now complete. Like everything is complete. So you have to always, if you don't understand this video, you are going to understand it maybe in the next video or so. But for now, I just want you to understand this. And if we most likely just say, okay, let's really understand this setup right now. So I will be taking another buy from here. So I don't know if the market will get to this place, but if it gets to this place, I will be taking buy, and then my stop loss will just be above below there, and then my take profit will just be at 3 hour. So let's play the market out and see. All right. But then again, if you check this level now, you are seeing that the market is currently consolidating with this level, and the market can use this as a liquidity. The market can use this as a liquidity, so be careful, and then just use your Fibonacci from this high, from this low down to this high. So you might as well take a trade from here. Always note, always confirm to really know, okay, what's this market doing? Because why the market have already created another liquidity here, so this will be now be an general liquidity, but you haven't get into that yet. But I will not say, okay, let's take this trade here. But if I'm using that trade, my stop loss will just be right here. This will not be two trade. If I'm ready to lose two trade, lost one trade, and then use the other one as my take profit, because why I can take trade from here, put my stop loss here, and then the market will trigger me out, and then take another second trade here, take another second trade. My stop loss will not be here, just like this. Take another second trade here. My stop loss will be here, and then the take profit will be here, because why I already understand what the market is doing. So let's just see how the market play out, because I don't want to. If I say I should put my stop loss right here, I won't get my 3 hour complete, and I need this level to complete 3 hour or maybe 4. So let's just play it out. So the market trigger me in on this one. I think I need to fast this video so that I can explain more better on this place, so that I can end the trade. So right now we are seeing something like this. So I'm going to put it in 1 hour so that it could be fast. So you can see it now. Like this is clearly what the market do every single time. This is clearly what the market always do every single time. And secondly, don't forget to draw that Fibonacci, because why? It will help you on this strategy. Because if you can't draw the Fibonacci correctly, if you don't understand how to use the Fibonacci, because I'm going to do a video about this Fibonacci, because it's like my entry, my exit, and my everything. Like this is just how this trade work. You can see now the market have finally. So we have taken how many trades on this trade? One miss, two, three, four, five good trade on this simple analysis, just to understand, okay, before the market push up, because we know that it's going to be in an uptrend. Before the market push all the way up, we need a reversal to the downside. How many times reversal? Two break of structure to the downside. So if you clean this now, I think I can take this screenshot. So I can take this screenshot. If you look this now, you are going to see that, okay, here was a major inducement. The market took it out, and then this place was a major inducement, or you can call it a minor inducement, and then the market took it out. So you can use 1 hour time frame to take this type of trade. This place was a major inducement again. So in the different way that you can understand the market, but already know that the market is going to be pulling down. So you can enter a trade from here and then break structure to the downside, and then wait for confirmation to enter, maybe with your Fibonacci level, to enter the setup. So the second trade already happened, which is first break of structure and then second break of structure. So what are you now looking for? I want this market to get to this level before I could buy. But sometimes the market will not get to this level. So how are you going to know that the market will not get to that level? You are going to use your Fibonacci from this low down to this high, then see what the market is doing. You can see that the market creates liquidity at this level. So the market can most likely take out this liquidity and then use this place as your entry to buy to the upside. So this is how the market works. So if you find this video helpful, subscribe to this YouTube channel, because I will be posting a whole lot of the video on this YouTube channel that will make you understand the market more better. So see you on the next video. Peace out.